Hey traders, my name is Shogun 247. I train traders how to trade in harmony with the market. Today I want to see if we can trade the US dollar Japanese yen live. Also, this is going to be a little bit of educational for those that are still progressing on their journey to becoming a consistently successful trader. I analyzed this chart yesterday. You can see all the lines are still on the chart, but the idea is this: we use the wave structure. Okay, we have the 5 high, then we have the 0 to 1, 2, 3, 4, and the 4 to 5 is still ongoing. The reason I said it's still ongoing is because we've counted this wave here, even though we have a manipulation of 2. Unless the price break above this 4 structure again, then we will still be expecting a lower prices. Okay, and the reason I say that is you have to understand the market phase that you're trading. So a simple explanation is when you have a downtrend, you need to understand the series of lower lows and lower highs. And at the lower high, from lower low to lower high, which forms a structure in a downtrend, that carries information, important information. If nothing changed here, then this is an ordinary, you should be looking to sell. If you don't have a trend changing pattern here, when the price come here at this secondary trend, you should be selling. Okay, and that is why we said, what are you expecting? The secondary trend in a downtrend is the price from the lower low to the lower highs. Okay, and this can be called retracement. There's so many names that means the same thing in trading. And I also want to explain the importance of secondary trend to you today, because market itself is a discounting mechanism. Therefore, when a price moved in the uptrend, okay, it will later be discounted because the price will become too high. The people that bought from that low to the high, they will start to take profit, and that high will no longer represent good value for them. And therefore, you start to see the price coming down. How far this price will come down, we don't know. That's why we use different tools like Fibonacci and stuff like that to give us a high probability area on of price pullback or consolidation. And the same thing applies in a downtrend. When the price is trending down, at some point when it becomes too low, the price will no longer represent good value for those that are currently selling. In some of my videos, I've explained that you should always ask yourself who is winning in this market, who is making money. Okay, so let me push this to the side, and this is the point here. You ask yourself who is making money, and the reason I said that is this thing is still coming down. This is the major structure of the 4 hours. We have the 1 hour structure here, and there's nothing else. And in every pullback, I said to you that you have to, if you don't have a trend changing pattern in the last pullback, when the current pullback is happening, you must not think this thing is going to go up. After the pullback, you will be looking for evidence to sell. If the current move gives you a trend changing pattern, then you wait for the price to move again in that direction, then you can buy because you have a trend changing pattern. And that is why the secondary trend, I'm going to show the slide again. That is why the secondary trend is very important. Okay, so knowing the fact that the price does not move in a straight line makes the market predictable. Even though I encourage you not to predict, but at least you have a general understanding of the cycle of up and down movement in the price, as long as you can establish the primary trend. And that is your job. Analysis Analysis trading is all about execution. Analysis is just something that helps us to pick those high probability trades. Okay, in trading, when you execute the market, buy or sell or do nothing, that is what determines how or what you are, a profitable trader or a losing trader. Okay, the analysis you do before execution is what clarifies the fact for you. Okay, and it should not complicate the matter. So you must have a way of looking at the market. So having said all that, this is the one we want to trade. Okay, our expectation, even though the price has come above this two, which is a weak two anyway, you can see there's no reference to it, but it is there, we can see it. That to make a lower low, and at this lower low three, we have more than 70%. I've said this before. I'm gonna type, we have, when you have three-way structure, you have more than 70% probability of a new low. Okay, and that is good enough for us. All right, then all we have to do is to be patient and to monitor the price closely and follow your strategy. You must have a way of coming into the market, and you must have a way of getting out of the market. A simple strategy, and I'm giving this away for those that like creating strategies. The simple thing you have to do, I like to use the price based, including some technical tools, which I'm going to show you in a bit. Some of the things is simple way of doing it is this. You must keep it simple. What gets you in, gets you out, gets you in, gets you out, keeps you in, and you get the gist of what I'm saying. So if I bought here for a reason, okay, that as long as that reason persists or is still valid, then I have to be in the trade. If I come out because I'm shaky or I think the market is too high or whatever it is, then I become fearful. So when you are creating a strategy, you must make it simple so that you can have a full reference when something is changing, and what gets you in will get out again. So let's go to the strategy now. Okay, we want to sell, we are no longer, we don't want to buy even if this price break above this structure. Okay, we're not going to buy it, we will wait for price to fail again and we will sell. But right now I have my tools here and I'm going to refer to this thing. I have a strategy already written down that we normally use. I hide this so that it doesn't complicate the chart for me. I need to see the price because the price is my leading indicator. So what we are looking for, we want to sell. So I'm going to the red one. Sell at the high of the day. So this is the high of the current day, okay? And I'm looking for the last swing down, okay, to be black. We have the black there, which is good, confirmed by the DMI bars. Yes, I have black DMI bars here. Okay, then I'm looking for a swing against this move, which we've got there yet. Yes, it came above this mini or internal lower highs. That's good enough. We have a change of character. That tells me I have a change down, I have a change up. That correction is valid. And that current swing is white. And there's no break of market structure. So there's no break above. And I don't have any information that says break of market structure, something like this on the opposite side. If I don't have that, okay, I have a setup. Then I want to execute the trade. I want to sell. I will only sell when this, which is the volume, including the momentum, volume momentum, okay, print a lower red area. What I mean by that is the last red is here, okay. As soon as I see it start to print down a new red with the setup in place, I'm going to take a sell. And that is as mechanical and as simple as I can make it. Okay, this to some people it might be too complicated. Trust me, this is a simple mechanical uh, strategy that I have tested over the years, and I have found it very, very consistent. As long as I know where I am in the price structure, the rest I can easily follow something like this. Okay, indicators will not tell me to buy or sell. Okay, I have to make that my mind up using the price, but I can use in terms of execution, entry and exit, I can use the strategy. So basically, I can hide this now. What I'm looking for is a red VMP to the downside without having a break of market structure to the upside. Okay, guys, this is now coming to the time where you have to be ready. We don't execute trade while the candle is still ongoing. So we have 7 minutes for 3 seconds before we take this trade, because anything can still happen within this candle. It may stop there and go up. So you have to wait. Okay, and as you can see, this thing is now below. If I don't think you can see properly, but you can see there's a line at the top, line at the bottom, and line in the center. We're currently coming, the VMP is coming below the bottom line, the middle bottom line, which is a confirmation that we need. If this candle close now, we will take the sell. Okay, but the best thing is for you to wait. 7 minutes is not gonna kill you. You just have to wait. You see what I've just said now, it disappeared. You wait for the close. As long as the close of the candle, at the close of the candle, the VMP is still red, we take the trade. This is the reason we always say don't jump the gun. Okay, some of this concept, there's a reason we keep mentioning it. This here was a candle that printed the red VMP. Now the candle closed right above the low of the previous candle and the VMP disappeared. So if you've taken the trade without waiting for the close, then you now start thinking, oh, I should have waited. So it's always good to wait for the close of the candle before you take the signal. Now we can take the trade. That's the sell. Now we sold. Okay, look at this candle here. At the close of that candle, the VMP closed red. So the setup, this has taken, I think we were on this bar when I started recording, and that's 1, 2, 3, 4, 5. So over an hour, 30 minutes. That's the time that is critical for you not to jump the gun, to wait. It sometimes is longer than that, but and sometimes is very quick. The following candle, you can take the trade as long as everything is intact. But waiting is part of the game. So now that we've taken the trade, where should we put our stop loss? The stop loss will come above the structure. So which is this one that we already have here. And you probably need to give it a little bit of room. I'll probably say above here, because of 15 minutes chart, you may give it 5 pips above the structure. So your stop loss will be 154.06. Okay. Then when you've done this, the trade is now intact. Okay, you are now in the trade. You've put your money where your mouth is. Let me hide some of these tools so we can have a clean chart again. Okay. um I'm going to hide the drawings also so we have a clean chart. Now I want to share a simple concept that I have managed to follow for a while, and that is the fundamental truth, traders mindset, probabilistic belief system. This is a teaching by Mark Douglas, okay, the late Mark Douglas. I feel is one of the key factor in where I am today in terms of trading. Okay. And the simple concept is this: these are the truth that you have to repeat to yourself every single time, not just head knowledge, but it has to be functional. Anything can happen. We've taken the trade now, anything can happen. I have to accept that this is a trade that I've taken, and I have to put my stop loss and accept that stop loss, knowing the fact that my job is done. Okay. And because if this trade works now or before, because the other trades that we have taken in the past has worked out, does not mean this will work out the same. The moment is unique, even though we have a similar um, picture in front of us. And this edge, also the third one, is an edge is just an indication of a higher probability of one thing happening over another. All my analysis, all the things that I've been saying to you guys since, is just an indication that price might go down. That's my opinion. That's my opinion based on what I have understood the market to be, and it's just a an indication. It doesn't constitute to a certainty. Okay. And also this one here, the fourth one, says there will be a random distribution between winning and losing trade. That means you're going to have losing trade, you're going to have winning trade. You don't know which one will win, you don't know which one will lose. Therefore, once your edge is present in the market, you must take the trade. You have to take those trades, and you take them um, in a consistent, flawless way. Basically, we have walked you through how we executed this trade. Trust me, I have to continue to do that in order for me to continue to gain or get the result that I am getting. And when I have a losing trade, I'm going to move on to the next one, because look at this. This is my basket of things that I can trade, and you can easily go through this list and find another trade in the next half an hour or 1 hour, depending on your trading style. You don't have to know what will happen for you to have a winning trade. I do not need to know what will happen next. I've taken the trade based on my analysis and methodology, and that is my job is finished. So now I have finished the job. I will set my target, which we haven't talked about. Let's use the last few minutes to talk about the target of this trade. So we have on this chart couple of things. Fibonacci, people know, for if you've been watching my video for a while, you know that I like to use the Fibonacci. Okay. And as you can see, the bigger Fibonacci, this one's on the right hand side, is the 4 hours wave structure 2 to 3, which has already given us the T1. Okay. And that T1, this is a cycle that I haven't explained before, and I don't, it's going to take me too long to explain it. But what I'm expecting, I'm just saying it for myself now. My expectation is that because the price stopped at the T1, I've seen a pullback. I have a 3 here. There will be a continuation, and the continuation that I'm expecting is to break this 61.8 low with a strong participation to the next level, which is 110. We have a confluence here with the internal structure with this one. The second Fibonacci, which is this small one here, that has been measured from the 2 to 3. That is a reversal Fibonacci, and I'm looking to target the 161.8 to 200. So that creates a confluence for me. This area here is my zone of target. Okay, anywhere here I can take the profit if price gets there. We don't know, there's no certainty in trading, but you always have to have expectation. So basically, this is a simple way of executing the market. My name is Shagun Chatu.